How's it going, everybody? It's Stas here. So the markets had a pretty good day today. The S&P went up 0.3%, the Dow went up 0.4%, the Nasdaq 100 broke even, and the Russell went up 0.75%. So today we're going to break down some stocks, some charts, my thoughts on the markets, and overall why I believe we're going to break down some charts to back this up. The markets could be going lower in the short term. So if you all find value, smash the like button, subscribe, go down below, get your $50 from M1 Finance, your 2 stocks from Webull, and check out my Patreon for all my real-time buys, sells, call-outs, private Discord access, a morning update video, plus more. All of that's on Patreon, link down below. And with that being said, let's get right into the video. So the markets did well. Like I said, the S&P 500 went up 0.3%, hitting a brand new all-time high when it comes down to SPY at $454.05. You guys can see that all-time high was hit in the beginning of the day as we saw a nice pump in the first 15 minutes of the session, and after that we pretty much cooled off for the latter half of the day ever since 10 a.m. here on the East Coast. So we got that nice pop in the morning, all-time high, and then we sold off for the rest of the day. And on the 20-day chart, you guys can see we did hit that, like I said, all-time high, but we're still struggling a bit at 454. You know, that's been a sticking point the past couple of trading days. You know, the 31st of August, we saw on the 1st of September being yesterday, and today we struggled at about 454 again, even though we hit that all-time high. And when it comes down to QQQ, you guys can see we hit an all-time high, not today, but yesterday at 382.71. We closed under that 50 moving average on the 20-day chart, but we closed above the 180 moving average, which has been support over the past couple of trading days. And one thing that's sticking out to me, guys, even though we're uptrending, even though when it comes to QQQ and SPY, we're trading above the 180 moving average, right? And for SPY, we're trading above both moving averages on the 20-day chart. One thing that's sticking out to me, which is why you saw the title, markets could be going lower, there's a clear-cut bearish divergence when it comes down to SPY and QQQ, at least here on the 20-day chart. And we'll look at some larger time frames and see if I'm seeing it there as well. You can see, even though we've been going higher in terms of the actual price of these ETFs, the moves themselves have been getting weaker. That is a bearish divergence. When the RSI is cooling off, getting weaker, but the ETF, the stock, the index, in this case the ETF, is still going higher. You're seeing that on the 20-day chart here on SPY and on QQQ. Very, very obvious. You guys can see it here on QQQ. So that is a bit worrisome to me, you know. This could lead to a potential sell-off in the very near term. Heck, maybe this month of September, which I've mentioned before, it's statistics, it's data. This is the worst month when it comes down to the S&P 500 in history. I believe stemming back from 1945, which that's a crap ton of data, guys. That is like 100 years ago. Gosh, my math sucks. 80 years ago, 75 years ago. I mean, that is a lot of data showing September being the worst month overall with an average return of 0.56% in the red, right? And let's see if we see that bearish divergence on the larger time frames. I'm not seeing it here on the 4-hour on QQQ. Let's see SPY. Let's take a look together, guys. I'm not really seeing it either. Excuse me, guys, on SPY either, but on the 20-day chart, it's clear as day. So that makes me a bit nervous. That is why I've been hoarding some cash. I'm not all cash. I'm not one of these perma bears that's all cash all the time. But I do have a good amount of cash right now just in case we do end up selling off. the bearish divergence plays out. And we had jobless claims come out today. First-time jobless claims totaled 340,000 for the week ended August 28th, compared with the 345,000 estimated from the Dow Jones. That is the lowest level for initial claims since March 14th, 2020, when first-time claims totaled about 256,000, just before the CV caused a historic rush to unemployment benefits. And you guys know this, probably. I mean, you should know it at this point, that many people were making a lot more money on unemployment benefits than they were at their actual job. So they didn't have incentive to actually go back to their jobs until now. Economists are looking for a more robust job creation now that the unemployment benefits, which are or is a safety net for those who lost their jobs during the crisis, are set to expire. You heard that right. These benefits, unemployment benefits, are set to expire on Monday. So now pretty much people have to rush back to their job for the most part, or else they're not going to get these jobless claims, or these unemployment benefits, rather. So who knows? These next couple of claims, or the weeks, rather, a couple months, I expect, it doesn't take a rocket scientist to say this, I expect that these jobless claims are going to get less and less and less and less these next couple of weeks/months as more people are going back to work. And this is actually good for the economy. Jerome Powell's been saying for him to increase interest rates, which I don't know when the heck that's going to happen, but he wants to see full employment. So now that we're getting more people rushing to the job market, is this going to lead him to, hiking up those rates sooner than expected? That could happen. But I don't know. I'm also on the side of, let's say this CV gets worse, we get shutdowns. He's going to keep those rates at zero for a lot longer, in my opinion. It's really up in the air at this point, and I'd love to know what you guys think, as always, down below in the comments. And if you all are enjoying the video, finding value thus far, and if you like this hat I'm wearing, this fedora, make sure to smash that like button. Let's try to get at least 150 likes on this video. We got 140 yesterday. We failed that challenge. So can we just get 150 this video? Crush it. Let's try and get 200. Screw it. Let's try and get as many likes as possible. Smash that like button. And let's now talk about some stocks that I'm looking at, many of which reported earnings. Well, a couple, not many of them. A couple of these 8 just reported earnings today. Number one being DocuSign. They just did EPS of 47 cents versus 40 cents estimated. Revenue came in at $511.8 million versus $487.5 million estimated. So they beat EPS, they beat revenue. And if we look here on the live news tab, let's see together what they're doing for guidance. They see Q3 sales of 526 to 532 million versus the 520 estimate. So that's a nice beat in terms of sales guidance for Q3, and they see full year 2022 sales of 2.08 or 2.078 billion to 2.088 billion versus 2.05 billion estimated. So nice sales guidance there. That's above the estimates. And revenues are up, I'm reading here, 50% year over year. Not too shabby. And the stock is selling off a bit. We closed at $294 today. The stock went down 0.9% overall on the day. And now after hours, we're down at $288. So we're down another $6 after hours, and we are seeing a lot of volatility. I mean, this did go up momentarily over 300. It got to 304 after that report, all the way back down to 285. So that is, geez, guys, voice crack number one there. That is a 6% gap, or a spread rather, from 304 to 285 after hours here. Now we're at 289. So talk about volatility on DocuSign. And full disclosure, I don't own this stock. I'm seeing a mean bearish divergence on this as well. RSI has been weakening ever since the beginning of June as the stock's been going up. Now with this earnings report that clearly investors, traders are not eating up because the stock's dropping. This could maybe go lower, especially if we take out 282, which was the low point from the middle of August. This could go 270, which was the low point from the middle of July, and maybe even lower from there. So for me, I am not too attracted to DocuSign right now. It's trading under both moving averages as well. We're seeing a bit of a death cross, so I'd be careful with it. But that doesn't mean it's a trash stock. It just means that in the short term, it kind of has to figure itself out, right? So I'm not touching it. Another one that I'm looking at here is Broadcom, AVGO, which when I was prepping this video, they didn't report their earnings yet, so they're probably out now. Let's take a look here together. Let's see, 696 EPS versus 688, so that beat. Revenue came in at $6.78 billion versus $6.76 billion estimated, so double beat on EPS and revenue for Q3 when it comes to Broadcom. And let's see here. They declare an unchanged quarterly dividend. Okay, not too bad. What is their Q4 outlook? It says here, okay, they see sales of $7.35 billion versus $7.23 billion for the next quarter. That is solid. And let's take a look here together at the chart, guys. We hit 507 a couple of days ago, which I'm assuming is an all-time high. I mean, what stock isn't near all-time highs right now? If there are any, well, there's obviously a lot. But most stocks out there are near all-time highs. So at this point in time, you guys can see we're moving down towards the moving averages. We're actually above the 50 SMA right now on this 4-hour chart, as we are down about $4 after market hours. And you can see we've bounced around both moving averages here on the 4-hour chart every single time that we've seen a retracement these past couple of weeks. So I expect this time to be no different. I mean, I could be wrong. This could easily tank back down to the mid 400s, low 400s. That's possible. Anything is possible in the stock market. But I think buyers will step in, whether it's at 475, 480, 485. I think we could get a dip buy here for a move back over, $500 on AVGO. So I'm watching that. American Eagle, which I mentioned before, I never go to the store, never shop there, but that doesn't matter because they just reported earnings and we got EPS of 60 cents versus 53 cents. That beat. Revenue missed, though. Revenue missed. It came in at $1.19 billion versus $1.23 billion estimated, and this looks very similar to JWN, right? Nordstrom, at least the pattern does. This is towards the bottom of the channel here on the 4-hour chart. Same with JWN. And full disclosure, you guys in my Patreon know this, which again, you can join that down below. You get all my moves there, plus a lot of more perks, private Discord, morning updates, and so forth, video updates. You guys know that I'm long JWN. This is one that I've been buying recently, and I'm actually selling some covered calls on it as well. I believe I bought, which ones am I doing right now? $31 strike. Later on in September is when they're expiring. I think I collected about 50 cents per contract premium, something like that. I'm doing that for JWN, and since I'm in this, I'm probably most likely not going to get an AEO, which is American Eagle, but I'm still going to be keeping my eyes peeled on it. As it is pretty oversold right now. And I'm looking at Gnog, Golden Nugget Online Gaming, which you guys know, again in my Patreon, I post all my posts, right, or my moves. This is one that I was buying for months. My average was in the 12s, and I sold it once they got bought out in an all-stock deal by DraftKings. And in hindsight, I should have held it because it's up about $4 from where I sold it per share. It's up another 15%, but it's okay because I made 50%, 50, on that position, which I'm taking all day, especially for a stock that I held under a year. And at this point in time, look at it. Trading above the moving averages, it's looking very bullish still. It broke above 20, which was a sticking point from February all the way through the middle of August. So it broke out of 20. Now it filled the gap as of today pretty much all the way to $23, which was a sticking point in the middle of January. And this could break 23, guys, by the looks of it. It very well could. And if we do, this might fill the gap to the next main target, which in this case, well, there's two main targets actually. Let me not fail to mention this one. The first one's $24.75. That was resistance in the middle of December, and if that were to break, $28 could be next, which was the high at the end of 2020. So there's more upside in this, even though I'm not in it. Again, I probably should have held it, but it's okay because profit is profit. Money is good. Well, making money in the stock market's good. That's always the goal. Obviously, right? We don't want to lose money. And I'm not complaining about a 50% gain again in under a year. I am pretty happy with that. And the next stock I'm looking at is ILMN. That's the one, right? Illumina. I hope I'm saying that right. I think I am. Illumina is down from 526 to 570. This is a 10% drop, so it's in correction territory. You guys can see in the middle of August is where we hit 526, and back in the middle of February is when we hit 526, 530. So we failed breaking out of there in the middle of August, and we sold off. Like I said, we're down 10%. We're in correction territory. So at this point in time, we're under both moving averages, but we're holding the uptrend. So we got to break above 475, in my opinion, for this to start filling the gap back to 500 plus. And that is where us as traders, swing traders, short-term day traders, momentum traders, whatever you want to call it, well, those are all very different. But, this is where we could hop in and make some money, whether it's from 480 to 500, 515, 520, 500, up to 525, 530. I think this gap could be filled, especially if we start peaking above those moving averages. So I'm watching out for Illumina here. McDonald's is another one which looks pretty bullish. Ticker symbol MCD. Check it out here, guys. This one's breaking out of the wedge on the 4-hour chart. We're peaking above, well above, actually, both moving averages here with many green candles in a row on the 4-hour chart, which is awesome. Now there's only one sticking point left. 240 to 241, which was a sticking point in the middle of August towards the end of August. And I think if 241 breaks, which I probably should set my alert right there, if that point breaks, this could fill the gap to all-time highs, which are right around 247. And you can see based on this oval tool, right, that is the next main gap, which is about $6 per share, or about 2.5%, 3%, which might not be the most attractive profit potential for some, but for others it is. I think it's worth it. So I'm going to be watching this breakout. I really like it. GameStop is another one. We're seeing an ascending triangle on this 20-day chart. Look at this. Clear resistance at 225, 230, which, mind you, we hit a high yesterday of 230, at least a high here on the 20-day chart. And this kind of looks like a bull flag as well. So I'm looking at GameStop. I think the rally is not over. I've been saying that. I've been right thus far. And I think we could go from 212 where we are now, where we saw a bit of a dip today, consolidation as well, even though we didn't have a red day. In fact, we went up 0.3%. I'm just going to say it's a consolidation day. And whoa, I didn't even realize GameStop's earnings are coming up in 6 days. Woo, that's going to be interesting. So let's see if GameStop makes a move back to 220. Jeez, guys, voice crack number 2. Hold up. Let's see. 220, 225, 230 is where we could be going on this one. And Tattooed Chef, what can I say? I mean, this thing is ridiculous. Up another 7% today. Up another $1.60. And now it's breaking out of this key 23.50, 75 roughly resistance from back in the beginning of June. end of May. So now the next main target on Tattooed Chef is between $26 and $27 to $28, which is where the highs were between, December, January, and February. That is where I think it's going. But the chart, it's a bit worrisome to me. It's way too extended. Let's be honest. Come on, let's not kid ourselves here. This stock has gone in a straight line the past 2 weeks from 16 and now over 24. It's up 35% in 2 weeks. RSI is very overbought. And like JWM, this is another one that I have covered calls on, that I'm selling calls on. These are for September 17th. My strike is at $30 on those. And that's a price that I'm willing to give up some shares. I'm not writing calls on all of my shares, but I am on a decent amount of them. And I'm willing to give up my shares that I obviously have calls on at $30, considering my average is $18. And the way it works, guys, is when you're doing covered calls, you want to set your strike price higher than what your average for the shares are, right? So if you do get your shares called away, you do make that profit spread from what your average cost is and the strike price, which in this case is $12 for me on Tattooed Chef. And you keep the premium, which I believe I collected about 65 cents per contract, which is pretty good, considering we've seen such a big pop. Calls are getting more, the premiums are getting more expensive. So that's why I did what I did there with the covered calls. So that's it, guys. I'm trying to catch my breath here. Give me a second. That's it, guys. Hope you all enjoyed the video. If you did, hit the like button, subscribe, drop a comment, and check out my Patreon. If you guys want all my real-time buys, sells, call-outs, option moves I'm making, whatever I'm doing, long-term investments, all of that's on Patreon. And you get private Discord access, plus a morning update video, and more access to me throughout the day. There's a ton of value on Patreon. Check it out. Link down below, or you can go to StockSurfS.com/Patreon. Make sure to also get your 2 stocks from Webull and your $50 from M1 Finance. Those are linked right down below. And check out my video from earlier. I went over 4 oversold stocks in that video. Check it out. I'll pop it up here, or you can go to my channel and just go to the video before this. I'll see you guys there. Thanks for watching again. As always, keep crushing the markets. Stay safe out there, guys. Peace out.